Hi all. Add or keep or drop a segment. Yes, this is the topic that I'm going to explain today. This is a part of decision making or marginal analysis, and this particular concept is a part of CMA US Part 1. Now, whenever we have to face situation whether or we have to make decisions on whether to add a particular product to our product line or a particular service to our product line, to keep it or to retain a product. Whenever we have to make such decisions, they are largely determined through relevant cost analysis and the impact the decision that we're going to make is going to have on the net operating income. Now, what is net operating income or net income at all? I've explained in my other videos, the link of which I'm giving below. But as of now, these are the two main things that we concentrate on whenever we have to make a decision on add, keep, or retain a particular product or service. In such situations, the two things that we have to concentrate on are the relevant costs and what will happen to the total profit, that is a net operating profit. Just these are the two things that you have to keep in mind whenever you are making decisions on odd or add, drop, or keep a particular product or service. Now, what is a thumb rule? If the avoidable fixed costs, which are avoidable means relevant fixed cost or the savings are greater than the contribution margin lost, you have to drop the product because there is no point in continuing with the product there. If avoidable or the relevant fixed costs or the savings are less than the contribution margin lost, you have to keep the product. You should not discard it or discontinue it. Now here, please do watch out for irrelevant allocated costs. Now, what are relevant and irrelevant costs? I've just given in another video, otherwise this video will become too long. Irrelevant costs generally relates to the sunk cost or the committed cost which do not contribute to the decision making. Let's see a scenario and understand this concept with the help of this example. This example I'm going to use throughout the video to explain this concept. Now, if you see in this concept, data has been prepared about 3 products: sanitizers, powders, and lotions. They've given the income statement where they have calculated the operating income. Now, if you see here, what is the operating income as far as the sanitizers are concerned? It's 7,600. Here 42,400, and the lotions have an income of 41,000. So when you look at the operating income, you can make out that this sanitizer, this product line is making a loss. So generally, if continuously this is the scenario, the company will decide, okay, let's drop this product. Let's discontinue making this product. Now, let's bring into the scenario some other points that you have to consider and see whether your decision to drop the product, you're going to continue with that or not. Okay, so let's see the points that you have to take in mind. Now, the fixed selling and administrative expenses. If you look here, the fixed selling and administrative expenses, students, I've just used the same example which was there in the previous slide. Throughout the video, I'm going to use that only. So if you look at the fixed selling and admin expenses, you'll see that it's the same amount. That means the same amount is being allocated among the 3 products. Okay, so here the fixed selling and administrative expenses, they are allocated costs. That means something that is not directly related to these 3 product lines, except for that related to direct advertising of sanitizers, which amounted to 2,500. That means if you drop this product line, only there'll be a difference of 2,500. So that is a relevant cost. It's a relevant fixed cost which will not be there if you drop the product. In addition, the fixed manufacturing expenses represent salaries, depreciation, and insurance, which are common to the whole company. They're talking about the fixed manufacturing expenses, which are common to the whole company, so it will not make any difference. However, included in the fixed manufacturing expenses, this is the fixed manufacturing expenses, is the $7,500 plant rent and utilities for each product line. What does this mean? This means that in case you drop sanitizers, this 7,500 will not be incurred, but the rest of the cost will continue to be incurred. They are irrelevant to the decision, that means. Now, this is an avoidable fixed cost, as this cost would no longer exist if any line ceased operating. Ceased means stopped. Suppose you discontinue that product, then this 7,500 is what you're going to save. If you discontinue sanitizers, this 2,500 is what you're going to save. Rest of the cost will continue to incur, so they are all irrelevant costs. Now how do you take a decision? The easiest way to solve is just prepare a contribution format income statement. Now, contribution means what? Sales minus variable cost will give you contribution margin. From that, you're going to minus all the fixed expenses and you get the operating income. So let us see. Here, when you see in case of sanitizers, the product which is loss making and which you are deciding to discontinue. In this case, if you see, the contribution margin is 43,200. That means it is making profit, right? Sales, from the sales, when you're minusing all the variable expenses related to sanitizers, you are making a contribution, which is contributing to covering much of the fixed expenses. So contribution margin, when you from that you're going to minus the fixed expenses, you are definitely getting a loss. But please remember, it is making a profit and that profit is covering some fixed expenses. Others, they are making profit, so we do not have to look into it as of now. Okay, now the simplest approach to any add, keep or drop a particular segment is, first is you find out the contribution margin lost. Now in this question, if you see, the contribution margin lost is 43,200. From less costs that can be avoided, you're losing contribution margin of 43,200 if you're discontinuing sanitizers. Now, what are the costs, avoidable fixed costs? In case you're dropping sanitizers, plant rent and utilities, which is 7,500, direct advertising expense just related to sanitizers, which is 2,500. That means if you drop the product, you're going to save 10,000, but you're going to lose 43,200. This contribution margin, it is contributing to covering 33,200 worth of fixed expenses. That means in all, if you see the total profit of the company, there will be a decrease in the company's net operating income if the sanitizer line is eliminated. And how much will the total profit or the net operating income decrease? It will decrease by 33,200. Now, what is the decision that you're going to take? Since the avoidable fixed cost or the savings that you're going to make, it is less than the contribution margin lost, we have to keep the product. You cannot discontinue the product. Now, I hope all of you understood this concept. In case you want me to explain any other concept, please do write in the comment below. Definitely, I will come up with a video explaining that. Thank you for watching Revoratube.